Hello and welcome to the latest episode of the Retirement Café Podcast. I'm joined today by Neil Cowell. Now, you may not know Neil, but you quite possibly will have heard of the firm that he works for, Vanguard. Now, Vanguard are a huge asset management firm, started in the States. They've got a really big story. They've been here in the UK for relatively new, I suppose, in the investment kind of world. Neil will tell us more about that. So anyway, welcome, Neil.
Thanks very much, Justin. Pleased to be here.
Thank you for joining us. So, Neil, you're head of UK retail sales in the UK for Vanguard. Could you tell me a little bit about what that job actually entails? Who are Vanguard and who are you?
Yes, of course. Yeah. So I joined Vanguard about 8 years ago to head up the UK intermediary distribution or sales division. That effectively covers the 13 or so thousand advisor firms in the UK and their clients. So we have a very strong focus here on advice and advisors, and it's through that myself and my team deliver the products and services of Vanguard.
Right. And what are the products and services of Vanguard for the listeners who haven't heard of you?
It's a combination of two predominant things, really, Justin. Firstly, we like to think we deliver high quality and low cost products that investors can use within their portfolios. But just as importantly, we deliver a significant amount of thought leadership and other such education that we think helps both advisors and their clients make better investing decisions.
So it's all about investing, and obviously Vanguard we've been around in the States for a long time and relatively new to the UK. What now, just so all the listeners are actually realise that Vanguard are, we are a client of Vanguard. We put a lot of our clients' assets and pension investments, etc., with Vanguard. We think you're great. We like what you do, and hence why I want to chat to you today. But for the people who as I say, may not have heard of Vanguard, what's kind of the backstory and what attracted you to joining Vanguard?
Well, Vanguard, I guess firstly about Vanguard itself. Vanguard has been around since 1975. It was founded by Jack Bogle. Unfortunately, Mr. Bogle passed away just a short while ago. But founded by Jack Bogle and his vision really to bring a fairer, lower cost investing to the public. He believed that the public weren't being well served by the asset management community and wanted to change that. So he created the firm back in 1975. And, over 40 years and $5 trillion later, that mission and that vision still continues. In terms of my own position, I've been with Vanguard here in the UK for about 8 years. And if I'm honest, it really was that mission, that challenging the status quo that attracted me to the business. I'd never worked in the asset management space particularly before, but it was being part of that changing outcomes for investors and challenging that status quo, that mission that very much drew me here about 8 years back.
So, we talk about asset managers, those are, well, for people who haven't heard that term, these are the people who actually manage our pension funds, manage our ISA investment funds, etc. What sets Vanguard apart, really, I suppose, from who did you work for before, by the way?
I worked for Standard Life.
Okay. So another big asset manager. So what attracted you, to Vanguard? And as I say, what stood out for you that Vanguard were doing that possibly Standard Life weren't?
Vanguard has at its core a mutual structure. So the US business is a mutual, and that's unique in the world of asset management. And that philosophy of mutuality resonates across every single one of the countries where Vanguard operates across the globe. And that mutuality really is quite simply about having a clear focus on client outcomes. One of the conditions really of a non-mutual structure, a more typical PLC structure, is that you're serving two different communities. You're serving both shareholders and clients simultaneously. there is at least the potential for that to be in conflict on occasions. And with a mutual structure, you have a singularity of purpose. Vanguard exists. You may well have seen this, Justin. Vanguard exists purely to take a stand for investors, to treat them fairly, and to give them what we think is the best chance for investing success.
Mm-hmm. Yeah, absolutely. And so, we're talking about investing success. I mean, this, we know this is a big question on anyone entering or approaching retirement, and that possibly a 30-year retirement now. Investing success is crucial for people's assets to grow over that time. What are the challenges you think which are facing investors, and how do Vanguard kind of help people to manage that?
I think one of the challenges facing investors at the moment is that we are in an enduring low yield environment. I think most commentators would agree that expectations of asset returns are on the lower side for the foreseeable future. And in an environment like that, the costs that are attached to these investments become critical. I mean, they are always critical, but you could argue perhaps even more so in a low yield environment. And costs is one of the things that we remain passionate about. There is no doubt in the world of asset management that you get what you don't pay for. So yeah, I think that would be one of the things that we would always counsel investors to be aware of, that impact of costs, that corrosive sort of long-term effect, that compound effect.
Yeah. And coming back to the cost, I know that, one of the reasons that we use you is because of this cost. You're very competitive on the costs, and it's one thing, of course, we can control. How does the cost and the mutuality kind of, the mutuals to me, for listeners who aren't familiar with the term, mutuals to me are the kind of the old building societies. They were mutuals when they set up, and we know that a lot of insurance companies in the UK were mutuals before they, in essence, became demutualized, Standard Life being one of them, the Halifax Building Society, etc., where in essence the policyholders were members, or the depositors were members of that society. That's the same then, you're saying, for Vanguard?
Yes, it's very much the same. The US fund holders are the owners of the business in essence. So that same principle exists. There isn't that conflict of both a client focus as well as an external shareholder focus. Our clients and our shareholders, if you like, are one and the same people. Yeah,
hugely attractive on that front. And so coming back to this thing we're wrestling with for people who invest in retirement, and they're getting a low yield, or in essence a low return from their cash deposits. Bonds are yielding very little now. Equities have had a strong run, etc. But we still got inflation running in the UK of 2 to 2.5%, etc. possibly for the foreseeable future. Where do investors look for long-term success?
Justin, I think that's, perhaps very much an advice moment question, really. But I think that there are a few things that investors are confronted with now. Whatever you do in retirement, you can't get away from the risk of longevity and the investment risk. So looking at those two things in isolation, people are living longer, which is good. So the need for an investment engine to provide them for future income, as they grow older is critical. So there's that longevity piece. Alongside that is the investment risk. There is an inherent risk with equity investment. And that blend, of whether it be fixed income or equity is very much dependent on an individual's circumstances and needs. And hence, for us, it's very clear that advice is the right way forward there. But I think with retirement no longer being a moment in time, we're seeing people, phase now retirement and certainly not reaching a fixed point and stopping work. We're certainly seeing portfolios now reflecting this fact that it isn't a moment in time by maintaining a reasonable amount of equity content within the portfolio, out of necessity. There has to, at the end of the day, be an equity engine to provide for those later years. So Yeah, I mean, we don't promote a particular shape. We don't promote a particular investment outcome. We simply talk about the merits of blending equities and bonds. But yeah, my summary would be absolutely this is an advice moment, but I think we're seeing more portfolios reflect the fact that people are living longer with greater degrees of equity content in their portfolios.
Yeah, it's what I see as well. And you've spent quite a lot of time around something that you call the advisor alpha. Can you tell me a little bit more about that?
Yes, of course. Yeah. So I think if you look back at the evolution of advisors in the UK, I think certainly the 90s, might have been around, I'll pick the best product for you. Maybe the early 2000s were around, I'll pick the best funds for you. And I think we're seeing that evolve now as we go into the next decade. We're very much seeing the advisor community evolve into, I'll be your financial coach. And the advisors alpha really is based on that principle. The content or the framework that we've delivered is split into two halves. The first part of it is around helping advisors articulate parts of the overall investing process that are perhaps taken for granted. So it's the extent to which advisors would help clients set goals, get the appropriate asset allocation, critically rebalance it, make sure the components are at low cost, get the asset location right, the right balance, the right spending strategies. All these are perhaps purist investment themes. I get that. But we were seeing that advisor firms simply weren't talking about it enough. And being able to confidently articulate that value is really, that's what we're seeing advisors start to think, start to do. So half of it was about challenging advisors, I guess, into how do you articulate that to clients? You're doing it, so why not tell them? The other half of the Advisors Alpha framework was, and we think as much as 50% of the overall value of what advisors add is the role of the advisor as a behavioral coach, as that trusted partner. Jack Bogle, that I've already said, Justin, who founded Vanguard, had a phrase that it was the advisor's role to stop their clients making dumb mistakes. And it is that role of the emotional circuit breaker, that trusted partner, that adds so much value. One timely intervention from an advisor in an advised moment could be worth 2, 3, 4, 5 years of fees. Yeah. So Advisors Alpha was blending those two things, and challenging the advisor community to think about what it is in that investing best practice they deliver and be able to articulate that. And secondly, to think what it is they do as that behavioral coach, that trusted partner, and equally to be able to articulate that.
Yeah, absolutely. And I think about, we're recording this in May 2019, and recently, yet again, we've had some scams going on. We're seeing companies going bankrupt, and they've been promoting products on the internet, etc., and they're disappearing. And investors have lost again some significant sums. And it appears to be that these are non-advised sales, i.e. the clients are not getting the protection that they deserve, that they get through taking advice. And by having a non-advised sale, that they've ended up losing, significant sums. And again, so I suppose that some of this advisor alpha you talk about is actually about, sometimes it's about not what you don't do as well as what you do.
Yeah, I would agree with that. I mean, we are very big advocates of advice and advisors. I mean, I'm sure the firms that we have been in relationships with for the last 8, 9, 10 years would attest to that. We, through our annual symposium events and annual road shows, we are regularly promoting the value of advice. There is an inherent protection with that. There is an inherent security, within that structure. And we think that, Advisors Alpha quantifies this, that an advised relationship, can be worth as much as 3% per annum to the good over and above an investor left to their own devices. So we're very passionate about that.
Yeah, absolutely. So it's been fascinating chatting to you, Neil, and I think a lot of listeners will want to know, find out more about Vanguard. Where could they do that, and what resources do you have available for someone trying to understand who Vanguard are?
Well, I think there are two. There are two obvious resources, really. I mean, there are nearly 7,500 firms of advisors in the UK who are using Vanguard in client portfolios. So
wow.
there's an obvious route there. Most advisors, as I say now, will be using Vanguard and will be able to help with client information and queries around what we stand for, what the products are, and what Vanguard is all around. Or, as an alternative, of course, clients can visit our website. But yes, but both of those media are there and both are available.
Great, fantastic. Well, I've really thoroughly enjoyed chatting to you today. Is there anything that I haven't asked that you'd like to mention before we wrap up?
No, I don't think so. I mean, at the heart of everything Vanguard stands for, we have 4 simple investing principles, and we believe these are appropriate, whether through an advised moment or coming to us directly. But those principles that everything here really is built on is we call them the 4 investing principles. They are around, number one, having a clearly articulated goal. Understand why you're investing. It sounds simple, but it's of paramount importance. With that in mind, it's critical then that you're choosing the right balance for you. What's the right portfolio? Where is your conviction? Do you want to buy a market, track a market at low cost in more passive type investing, or do you have conviction for more risk return characteristics? Thirdly, and we've talked about it, make sure that the component parts you buy are at the lowest possible cost. And fourthly, don't underestimate the role of that behavioral coach, that emotional circuit breaker. Keep the discipline. So those 4 principles of, goals, balance, cost, and discipline remain just at the heart of everything that we do.
Well, I think that's really wise words. I mean, yeah, absolutely sums it all up. So understand what you're trying to achieve, get the balance, look at, understand. A lot of people I find don't really understand the cost that they're paying, which sometimes I find a little, I suppose there's a lot of smoke and mirrors, but if you think you've got £100,000 or even £50,000 or even £10,000 tucked away in a little pension arrangement or what have you, understand what you're paying for that, and also understand where you've actually got it invested. Because what else, in any other part of life, if you were parting with £10,000, you'd spend a significant time understanding where you're spending that money if you were buying a car or something for your house or what have you. And I find that possibly people don't spend as much attention on the money they've got tucked away in a pension fund because it's not viewed as, they've amassed it over a number of years. So understanding the cost and understanding the balance and what those goals are. And then, I think you're right. You're going to getting that advice to check in to make sure that you're right. So I think those are definitely wise words to finish on, Neil. So I thank you for that.
Not at all. It's a pleasure.
So, I'm gonna wrap up there, Neil. So a big thank you for all those words of wisdom. We'll put in the show notes some details about where you can find out about Vanguard and the different products and services and the history of Jack Bogle. It's a very interesting story there. So we'll put the show notes in along on the website, along with the useful links as discussed. And if you've enjoyed this episode, then please let us know. So you can email me at jk@mfpwealthmanagement.co.uk. You can find me at Twitter or Justin King CFB. Please let your friends know or leave a review so more people like you can find us. So until next time, this is Justin King helping you feel more informed in your retirement.